All right, so Adobe had earnings this morning before the market opened. So I was supposed to play it yesterday before market close, but I completely forgot. I thought it was Thursday after hours. It ended up being Thursday before the market opened. So that means I was supposed to play it Wednesday before market close. So I missed out on it, and Adobe closed on Wednesday. It closed at 6:30. So my put spread would have been, if I had played it, and as you can see, good thing I didn't play it because Adobe fell 64 points or 10%. But it had closed 6:30. If I would have played it, I would have done probably a 590, 585 put spread. And as you could see, it would have been a loser, a max loser. So good thing I forgot, good thing I missed it. But what would I have done if I did play it and it was a max loser? So either I would have taken the max loss, or I would try to roll it by increasing the spread. I would not roll it naked, of course. I don't have the buying power for that. But let's see if I could roll it naked not naked, sorry, but if I could roll it as a bigger spread. So initially I would have had the 590, 585 put spread. So I would have this put spread here. As you can see right now, it's trading between 3 plus 6, 9. So it's trading around $4.50 to close it. So first thing I would try to do is see if I can get a call spread out of it. If I sell a call, and if I turn it into an iron condor, can I get anything out of it? Probably not, because it's too far. The premiums will be too small. So let's see here. So if I sell a 590, 595 call spread to turn it into an iron condor, I'll remove the put side and just see how much the call spread is worth. So I could get probably 40 cents out of it. So yeah, maybe I would do that first. So maybe the first thing I would do is sell a call spread, try to collect 40 cents and reduce my max loss. But then by Friday, by expiry, this call spread will be worth 0. But at the same time, if I take action now, the put spread is worth $4.50. But if I wait till expiry, the put spread is going to be worth $5. So it's kind of the same thing. Either I take the 40 cents out of the call spread and hold on to the put spread till Friday, which I'm going to close for $5, or I close the put spread now, pay a little bit less, but I miss out on the 50 cents or the 40 cents from this call spread. So it's the same thing. But going back to to what I was trying to see here is, if I wanted to roll it by increasing the spread, the size of the spread, does it work? All right, so I would have had the 590, 585, and if I want to roll it, let's say I roll it to February, let's say, so February 18, I'll add another February 18. See, now it's trading at 570. See, let's see if I roll it at the exact same strikes. What can I get? So 590, 585. So 590, 585, as you can see, it's going to be for a big debit. So about 9 minus 6, so about $1.50 debit. I'm gonna have to pay $1.50 to roll it as is. So now I'm gonna have to increase the risk. So I could do 2 contracts instead of 1 contract. So I just doubled the risk. And as you can see, in this case, I'm going to be able to roll for a credit. So 16 minus 13 is about $3. So I'm going to be able to roll this for an extra $1.50 credit. But this $1.50 is going to be divided by 2 contracts, not by 1. So I'll have $1 from the first spread and then $1.50 from the new trade. So I'm going to have $2.50 that I'm going to divide amongst 2 contracts. So now I'm going to have 2 contracts at a 590, 585 strike, but for February 18, and now I'm just waiting for Adobe to come back up above 590, and I've got a total credit of about $1.25. Now I'm adding risk to the trade, so it's a little bit, maybe it's not a great idea. Let's see if I can roll it to pick the at the money strike. So it's at 566. Let's see if I can do it at 565. I should be able to. It'll be for a small credit though, 565, 560, 2 contracts, and I'll be able to do it for a very small credit or break even. So if I had Adobe, I probably would have rolled it this way instead of taking the loss. I could have also just taken the loss. But another thing I could have done is probably even roll it even further, maybe to January 2023. It might not have 5-point wide. Okay, yeah, it does have 5-point wide. So I would do the 5. Actually, no, it doesn't. So I would go to January. So I would do maybe the 560, 550. I would do one contract because it's 10-point wide. I don't have to do two contracts anymore. So 560, 550, I could do it for a credit. And I can actually bring it even lower. I could do 550, 540. I could do it for a small credits. So yeah. So this would be a way of rolling Adobe if I had done the put spread for earnings. So as long as I think that Adobe will be above 550 by January 2023, this would be a way of saving a losing earnings trade instead of taking a $4 loss. And yes, it is taking more capital out of me, but it's not like I'm using all my capital anyway. So if I go back to my account, I always try to leave some buying power available. So if I've got 500 capital that's being held up for a year just to save a trade from being a loser, it's not like I was going to take that 500 and use it somewhere else and make money from it every month. So there's an opportunity cost because I've got capital that's held up. So this would be something that I would do if I want to save this this Adobe put spread if I had played earnings. So the other option would be to just take the loss. I would take a $4 loss, or even take 50 cents from the call spread. So I would take a $3.50 loss. But then what I would do is, because Adobe fell so much after earnings, I would sell a new put spread on Adobe for the next expiry, let's say January 21st. I would sell a new put spread, let's say 520 and then 515. 520, 515 put spread, and collect $1 from that trade. So 520. So I collect about $1 from this put spread, and then so I lost $3.50 from the first trade, but I could potentially make $1 from this trade because it's a brand new trade and it has a better chance of winning because the stock already made a lot of downward movement. So, and my new strike is even further. It's at 520 instead of being at 590. So that would be another way to compensate for that $3.50 loss on that earnings trade. And I just move on and keep placing more trades. Maybe even do two contracts on this one because it seems to be safer, and therefore I compensate for that losing earnings trade. Now, what I actually ended up doing today is I did sell a put spread on Adobe because it fell so hard after earnings, and I did the 520, 515 for $1. Got filled for $1, and but luckily I didn't play Adobe for earnings, so I didn't have to manage it. Now Fedex did have earnings, so let's look up Fedex. Fedex had earnings today after hours. I played it naked. I did a naked put because the PE ratio was pretty low. I mean, the stock is paying a dividend. It's a blue chip stock, and it dropped a lot last earnings. So it's always an assumption. Obviously, no one knows what's going to happen after earnings, but I assume that it has a better chance of going up after earnings, because if you look at the past year, it dropped a lot. I mean, the 52-week high was 320, 52-week low is 216, and it's got a very low PE ratio. So I played a naked put in the last few minutes here. Fedex, let's go to account, orders, executed. So Fedex over here, 210 put, December 17 expiry, so expiring tomorrow, so 1 day trade. Collected $1.10, and I think it's actually worth $1.20. See, by the end of the day, it was worth $1.30, so it wasn't even the best entry, but regardless, if we look at the stock, Fedex, after earnings, it actually went up. It went up 5, and if we look at the chart specifically, I think it jumped even higher, yeah. So you could see here, it had a high of, so it had a high of about 259. So after earnings, it had a high of 259, and then it had a low of 238. But yeah, right now it seems to have stabilized at around 250. We'll see what it opens at in the morning. but it looks like it's going to be a winner. So yeah, so these were my two trades. Adobe, I missed out on it, but I played it after earnings, and this is how I would have managed it. And FedEx, I did a naked put at 210. It was 30 points away, so good chance of winning. 1 day to go as well. And that's why I like to play earnings. I mean, I'm 30 points away on a $240 stock, and I'm able to make an easy $100 US. I might let this one expire worthless. It is 40 points away, but also I'm thinking this market is crazy. I could imagine a chart where FedEx just drops from 250 to 210 in 1 day. So I'm not sure. I'll see if it's trading for a few pennies in the morning. I'll close it. If it's trading for 30, 40 cents, I'll hold on to it and try to let it expire worthless. But as you can see, it took some of my buying power. It took about 4,000 US buying power to place this trade. So I don't like to be below 30K right now. I'd rather be almost at 40K buying power available Canadian. So I'm at 26 right now, so I don't feel comfortable with this buying power. But hopefully tomorrow I'll be able to close FedEx. It'll release my buying power. See, start of the day I was at 33,000 Canadian. Now currently I'm at 26. So part of it is Adobe, not Adobe, but FedEx. And I did make two trades, but they're spread, so they don't take that much buying power. I don't know what else is taking buying power. Probably Roku or something, because that's the only naked I have. Lightspeed, FedEx. Yeah, otherwise I have two spreads at 500, so it shouldn't be taking that much buying power. So it's mostly FedEx and maybe Roku. Let's blame Roku. All right, so these were my earning trades. If you have any questions, leave in the comment section below. Like always, if you're going to open an account with Questrade to trade on the stock market, use my referral link below to get $50 in free commissions. Thanks for watching.